For resource projects to deliver economic development, they must first be built. For those on the outside and many of us on the inside, investment decisions to build projects are something of a black box. We talked to Ken Haddow, who has spent much of his career leading new exploration and project development across the globe. Ken, welcome to Raw Talks.
Thank you.
Tell me, what are the key considerations in successful business development?
The most important thing in successful business development is identifying opportunities that are going to provide an adequate return on the investment made in developing them and have an acceptable risk profile associated with them. Within the consideration of risks, the most fundamental thing of all is the security of tenure.
What do you mean by that? Can you explain it a bit?
Meaning that the rights to the minerals are securely held by the investor. So the investor knows that when they put their money in, eventually they will still be holding those rights as the investment returns flow back to them.
The considerations, have they changed over time, do you think?
No, they haven't.
No.
They have remained the same for years, decades, arguably centuries. These points of security of tenure, of the ability to earn the return, have been critical forever in the minerals industry.
Is it the same between oil and gas and mining?
It is the same between oil and gas and mining, only in the case of oil and gas, often the returns from the investment occur much more rapidly. So the oil and gas investor is prepared to take more investment risk perceptibly than the miner, because they're not going to be there for such a long time. They will get their money back, they will get their returns relatively quickly compared to the hard rock miner.
Now, the industry must continually replace depleted reserves through exploration and project development, and that development from discovery to operation, it can take decades really. Why the lengthy timelines?
Those long periods of time are partly inherent in the process of discovering the minerals, defining a resource, evaluating the best way of developing it, and partly because it is such a challenge to find a viable pathway, economic pathway to developing them, and partly making sure that the risks associated with that development are themselves well understood and well managed. These days there's a much heavier process of dealing with what we in the industry call externalities, social issues, environmental issues, permitting issues. But actually, even without those, there's a tremendous research task required to understand a mineral resource. Again, the popular perception is a mineral resource is a very defined, clear body of X tons of whatever, and it has a value. The reality is it's a very variable, natural body that its variability needs to be understood, and the different options for its possible development, both in the timing of development and the scale of development and the nature of the processing, all have to be very carefully analysed and considered.
But governments, they often interpret this as sitting on resources for investors' gain. Is that the case sometimes?
It may be the case in some very few situations. More often than not, a government is just very impatient to see investment occur. And if anything, I would say my perception from outside of government is a government wants to announce that investment is being made by a party. That's the key thing they want. The time scales involved in mining don't always lend themselves very well to the political cycle.
Extractives projects, they must be carried out where the resource is found and not necessarily where the investment climate is best. What matters most when considering investment destinations?
We, the industry, and many around it have said over the last 20 or 30 years we have to go where the minerals are. But I think our experience is over the last decade or two that actually many of the places where there are interesting minerals for the industry have proved to be too challenging from the point of view of questions over security of tenure, uncertainty over the legal framework, uncertainty over the manner in which government and regulation operates, with the consequence that a lot of potential that was identified 20, 25 years ago has been passed by, and we see the recent boom has led to a lot of development actually in, we could broadly say, OECD countries, and the developing world has lost out considerably significantly because of the risk perceived in making very large investments in many countries.
And speaking of risk, I think it's fair to say that the physical task of extracting minerals and oil or gas is relatively well understood. It's all of the surrounding unknowns that really makes it a challenge. How do project developers deal with these unknowns?
The external issues are the new level of complexity in a mineral development, but there is great technical complexity anyway in today's very large operations and developments. Simply what's happened is there's an additional element being added now, and it's an additional element with which the most practitioners in the industry are not necessarily familiar. Given all of those technical complexities and economic complexities, the industry is very technically driven and technically peopled, and therefore the softer areas of community and environment are perhaps not the managerial strengths of the industry, and therefore they are, or certainly have been, perceived as more challenging.
So basically engineers having to deal with softer issues, is that the case?
Either engineers having to deal with those issues because of their particular management position within the organization, or engineers having to understand their colleagues who may be anthropologists or sociologists or environmentalists. It's a different field, and when the engineer is already facing considerable technical and economic challenges, it's an additional challenge for them to include all of that and appreciate that it can't necessarily be timetabled in the way that technical work has traditionally been.
Considering the big variety of risks that companies are facing now, how do they keep track of that? I know that some companies use a risk register. Do you think that that is a helpful tool?
I personally believe a risk register is an absolutely marvelous tool for understanding the totality of the challenges facing a project and for scheduling the management, if you like, of the overall task. In fact, I'll move away from the technical speak of saying scheduling the management, and a word I often use is choreographing the management, because I think it is a case of choreographing the whole that the world sees of the operation. It doesn't really matter if individual pieces are being executed with excellence. The question is whether the whole thing fits together in a way that people looking in from the outside say, that's good, or they say, because of one deficiency, that whole thing is awful. It needs to be choreographed together.
And the risk register can be useful for
it
that.
Is actually a very elegant technical way of fulfilling that overall task.
Moving into financing. Ever larger projects require ever larger financing. How does the short-term focus of capital sit with the long-term focus of project developers?
That's quite a complicated issue. The mining company is really the bridge between the short-term perspective of those investing capital in it and the long-term needs of the things that the mining company is investing in. The short-term investor may move in and out of the mining company. The mining company is in for the long term. I think the challenge is that the host government, for example, doesn't necessarily understand that they're dealing with two investors. They're dealing with an investor who is executing the task of a project.
And then the capital behind
and behind them, the capital markets, which have very straightforward needs of making a particular return on their investment. And that's an unchanging fact. whatever else may come on the table as a consideration for the mining company being successful, the investor behind them is interested in rate of return and the risks associated with that, and very often how soon they can get their return.
The extractives are volatile, they are not always the best performers, and they're generating bad press. Tell me, what are the key selling points for investing in the extractive sectors?
It is a sector that can provide very good returns at the right moment. The last decade has been a demonstration of that potential. I think the investor behind the mining company has been quite dissatisfied over the past decade because they have seen the industry invest capital rather than return it to investors. But typically, on the upcycle, the investor does very, very well. And in fact, investors in mining, they are typically, as you've said earlier, not a long-term investor. The investor is there for one thing, for a return on their investment. And so we must all, whether it's mining company, parties serving the mining industry, host governments, if we want the investment, then we have to understand that the needs of those financial investors who are managing people's pensions, insurance funds, university endowment funds, and so on, that they receive the investment returns that they're looking for.
Now, I want to look at a bit on how socioeconomic development aligns with business development. You have long argued the need for host governments and community to both receive and perceive the benefits from extractive projects. But what do you mean by this?
Well, I think for many years, people such as myself from the mining industry were talking to host governments in particular about the economic benefits that would flow from mineral development. And there was an inbuilt assumption with that if, say, tax revenues flowed to a government, those would in turn produce perceived benefits for the people of that country. And very often we've seen with natural resources, whether it be mining or oil and gas, that the revenues flow in one way or another. They don't necessarily reach everyone, or they don't reach them to the extent that they expected. Possibly that's because their expectations were unrealistic. But one way or another, it's vitally important for the success of an operation and actually the minimization of the risk both to the investor and to the host government for the continuance of the operation, that everyone perceives that they're gaining a reasonable benefit. I often say these days, it doesn't matter how many dollars are generated, it will never be enough if there isn't an adequate understanding of what's possible and a genuine feeling of we're gaining a benefit here.
Does this imply that the developers need to get more involved in getting the message out? Or is that a job for the host governments?
I think it's a job for both, actually. The developer definitely has to be more involved, and I would say today that the task of the developer is not just to generate an adequate return on investment, not just to look at risks, but to think about how is that social issue managed such that people will perceive the benefits. And very often governments as well as communities don't really understand the industry and its possibilities, so their expectations are perhaps unrealistic or in some way not directed to the best balance of things. So a company has a part to play, not in taking the role of government, but in helping as best it can to have the overall situation managed in a way that produces a good outcome.
Often projects have not been perceived as delivering the hoped for benefits. Do you think this is a case of misguided expectations or failed policies?
There was a period of many policy revisions in the 1990s which brought many countries up to date, really. There has been some dissatisfaction through the post-2004 boom period that those policies of the 1990s have not served countries so well. But I think that's really due to the misunderstandings amongst the people of countries and the governments of countries on how long the mining timeline is, and how important is the points of security of tenure and clarity of laws and the conduct of those laws, both by government and by regulators. And it's generally those latter areas that have been weak and have resulted in perhaps investments not being made or not moving as fast as people would like them to, or simply that people do not understand the very long timelines of large mineral developments.
Was that a lesson that came out from the latest commodity boom, that we need to focus on getting the security of tenure right, etc.?
I think the last commodity boom is a very good live case study, if you like, of how if policy isn't absolutely rock solid, clear, and well executed, the tendency is for investment to go elsewhere. Investment will go where it feels certain that if the investment is made, it will be secure and it will be allowed to provide the returns the investor is looking for.
So it sounds like there needs to be a long-term stability in order to attract investment beyond the cyclical nature of prices.
Absolutely. And the case of Chile is often talked about as an emerging market that has secured much mineral development. Now, Chile had a long mining past, but the policies that were introduced 3 or so decades ago gave investors a level of confidence in their security that enabled ever larger investments to be made to grow the Chilean industry.
You have observed that rigid contracts between host governments and resource developer risk unilateral government revisions when circumstances change. What is it that you're proposing instead?
The question of contractual flexibility, I think, is still a live one in my mind, and is still a debate amongst people around the industry. There were a lot of contractual revisions, law revisions, during the boom period post-2004. They were premised on the idea that mining had changed from its history of being a not particularly good sector to invest in to being suddenly going to be as good as high-tech investments, and sustainably so because of Chinese and other growing market demand. The reality was that it was an industry demonstrating the long timeline to produce new capacity. Chinese demand rose very rapidly, stretched the supply of the industry, prices rose, but as new supply came in, prices have gone back down, and the industry has returned to its normal condition.
Are there any working examples of a better governed relationship between host governments and resource developers than these rigid contracts?
If one looks at, for example, the case of Australia in recent years, Australian politicians have been seeking higher returns, higher share of the revenues of the mining industry, and the mining industry has pushed back quite hard against that on the basis that this boom was a transient one, and that's turned out to be true. So it was a fairly tough conversation, but it was between two parties that understood each other and were able to have a business dialogue rather than a philosophical standoff, which is very often the case.
You have mentioned something that you would like to see, and that is something, a relationship driven by goals. So goal-based management instead of terms-based management between host governments and resource developers. What do you mean by that?
Both parties to an agreement such as a mineral development agreement need to consider what are each party's goals. Return on investment and security of tenure and management of risk are absolutely vital on the investor side. On the government side, it's vitally important for the benefits to be perceived to the nation, to be felt to the nation. And so each party needs to frame its position understanding the others. And that's why I think the West Australian case that I give is one where both parties had different points of view, but they understood the others. And the goals were mutually understood and recognized. In a developing country situation, the goals of the nation may be more complex and expansive than, say, in Australia, but it is the responsibility of the mining company to understand and incorporate those in the position it takes in discussing mining agreements.
And with that, our session is up. Thank you so much for joining Raw Talks.
Well, thank you for having me.
And to keep up with the new debate on extractives and development, join us on rawtalks.org.